All right, welcome back to another installment of Mindset Matters here at UL Trading. I took a few days off. If you're keeping track, I was trying to do one every day. We took a little family vacation, a little family reunion, and 4th of July and everything else. It was very busy, and trading was not forefront on my mind, and so I didn't feel in a position to be able to talk about it on a daily basis. But here we are, back to the day-to-day here, and so I'm gonna pick up where we left off. I'm not sure what day it is. I think it's day 8 or 9, probably. You probably already know. It's probably in the description or something like that. So the topic on my mind today, and I've touched on this a little bit before, and it has to do with being aware of yourself and how you react to things in your trade. So what happens a lot of times is the trade setup comes along, things look good, and let's say you don't hesitate. You're like, oh, that's my setup. You get in, and then it starts to go against you, or it takes you longer than you expect it to start to go in your favor. You start to question things, you start to hesitate, maybe it pulls back immediately. It doesn't quite hit your stop. You're tempted to stop out. And there's a book by Tom Hougaard, I think is how you pronounce his name. And he talks about how the best loser wins. I believe that's the name of his book. And in that book, he talks about how all of the psychology of trading is such that any action that we take to get out of a trade that's not based strictly on the rules of our process is designed to avoid pain, right? That's human nature, is we want to avoid pain. We don't want to do things that are uncomfortable. We don't want to do things that cause us to be hurt. And whenever you're in a trade, the underlying factor and the underlying reason that we want to either sell early and not let it go to our profit target, or maybe take a small loss, or even if you're in a situation where you let your stops, you don't hold your stop losses and you just let your losers run, all of those scenarios can be sort of categorized under not wanting pain, right? To avoid pain. If the trade goes very against us, we don't want to sell out of it, because that would be solidifying the pain and the loss, right? We may think, well, it'll come back. I'll wait till it comes back, right? So that's one problem. The other problem is maybe we're in a little bit of profit. It went up a little bit, and now it's stalled out just a little bit, and we're not sure if it's going to hit our profit target. And even though our rules may say to let it go, we want to take that profit now. Why? To avoid pain. It's because if we take that profit now, we're not sitting through the uncomfortable, ups and downs of the market. Everything we do is to avoid pain. So we have to condition ourselves to not care, right? And it's not that we don't feel the pain. I don't think. I don't know. Ask me in 20 years if the pain, if the uncomfortableness goes away. I don't know. But one thing I do know is, and I've seen this with lots of people that I've seen, even some folks on YouTube that I've watched recently, to where, they're very hesitant or unsure. And in my mind, what it all comes down to is not having strict enough rules. If we have strict rules for entries and exits, then there's no reason for us to not get in, not take the trade if our rules tell us to take the trade. We have no reason to sell early if our stop loss hasn't been hit. We have no reason to take profits early if our rules don't tell us to take profits early. And so the first key is to have very defined and very strict rules. If you have your defined rules and the trade presents itself, you take the trade. You don't have to worry about, the other 15 things, that might be going on. And there's always some indicator, there's always some market structure that might give you pause. But if you've tested your strategy, those things should all be taken into account. And the probability is the same that, it'll be a winning trade or a losing trade. And if you're following a good strategy, the probabilities will be on your side over time. And so to avoid that nervousness, kind of that sick feeling, and then that anxiousness, have very strict rules and just learn to stick by those rules. Every time you're in a trade and you want to either sell early or hold too long or whatever the case may be, just say, what do my rules say that I should do at this moment? Doesn't matter what I feel, it doesn't matter what I think. What do my rules say in this moment? Because the worst thing that can happen is you break your rules and get out of a trade when your rules tell you shouldn't get out of a trade, and it's a good thing, right? which kind of sounds backwards a little bit, but it's worse for your psychology if you're in a trade and it's going in your favor, because I do this a lot, which is how I know. It's going in your favor a little bit. You're like, I'm just going to take that little bit of profit and close the trade. And then, sure enough, the market kind of dives off and, you got lucky and you sold it at sort of its peak. Now, why is that a bad thing? Well, it's a bad thing because now the next time you get into a trade, you're going to be looking for a reason to get out because you're going to remember, well, last time I got, I was right? I knew what the market was going to do, which is not the case at all. You just got lucky. In order to be successful long-term, and again, I haven't been trading that long, so I know it's maybe presumptuous of me to say this, but based on those that I've studied who have been successful, they'll all say the same thing. It's a game of probabilities. You take the trade based on your strategy, your edge, your advantage, and as long as you engage in each of those opportunities, over time, you'll be profitable. That's the way that it works. The old casino analogy, right? Why does the casino always win? Well, because the casino knows the probabilities, and the casino is part of every transaction that takes place, right? They don't stay out of one and maybe get in another one and maybe they'll take a week off and then they try one. No, they're in every single hand that's played, every single pull of the slot machine. They're in it, and sometimes they pay out big payouts, which would be a loss for them. But over time, they know they're going to be profitable. So, how to avoid the nervousness and the anxiousness, or at least dull that a little bit? Have very strict rules, stick to your rules, and when you start to question things, back up a little bit and ask yourself, what do my rules say? Am I following my rules by taking this action, or am I breaking my rules by taking this action? And if it breaks the rules, don't do it. It's that simple. If you look over a period of trades, 20 or 30 trades, and you say, you know what, my strategy doesn't seem to be working, and you can go to each of those trades and validate that you executed your rules correctly, well, then maybe you need to reevaluate your rules. But in the middle of a trade is not the time to do that. So that's my Mindset Matters thought for today. If you find any value here, we'd love it if you would like, subscribe, comment, do all those things. You know how to do that. We'll be here for a while. So trade safe, and we'll see you tomorrow.